Hello, everybody. Welcome back to the Response Able Solution. I'm Stanley J. Targos III. I'm your host, and I'm on number 5 of the $750,000 mistakes. And there's probably a couple more that we might leak in the future. But number 5 is taxes. And again, I'm not a CPA. I'm not giving tax advice, but I am going to help us put a concept together that helps us have better perspective and ask better questions so we can avoid some taxes. Someone said, "Hey, do you ever get a tax refund?" I'm like, "Yeah, I get a tax refund, $3,000, $4,000, $5,000. They're like, "I call that tax exuberance. I couldn't wait to pay my taxes, and I wanted to pay more than necessary. And then I wanted to pay somebody to get me my money back. I wanted to give the government a 0% loan for 11 months to hold my money instead of me having control." Well, tax exuberance is one thing, but how do you legally, morally, and ethically reduce the amount of taxes that you have to pay? Well, people say, "Stan, with the tax code out there, the only things that you can really take advantage of are putting money in a 401k. Well, does that save you taxes? Or does that just defer your taxes? The last time I checked, and if you do a historical research, your own historical research on the history of taxes, look how much money the government's collected in taxes every year for the last 50 years. Even when presidents claim we had an abundance and we had reduced taxes, look how much they brought in. If the government's only way of making money is taxing, and the revenue goes up every year. And if you go to the Government Accountability Office and see what their projections are for the next 5 years, it doesn't go down in how much they expect to receive, it goes up. So if you're deferring your taxes today, when you're married, have a couple kids, maybe you get a mortgage deduction, maybe you don't. Maybe your net tax bracket is between 12 and 20%. When you go to retire, you don't, most of the time, have a mortgage deduction. Your kids are gone. You don't have any other deductions. You're not funding a 401k with your 401k distributions. So you lose your tax deductions, or most of them, not all of them, but most of them. Are you going to be in a lower tax bracket or a higher tax bracket? You know, the government did a study back in the early 80s, and when they got rid of the pensions and the retirement accounts that were company owned, and they created the IRAs and the 401ks. And what they figured is if they could give people the ability to defer the liability from the companies of paying a pension, let them own it themselves, they would give them a tax deduction today, expecting that the taxes they paid in the future would be higher on a higher amount. Meaning this: I put my dollars in today at 12% or 15% or 20%. When I go to retire, I pay 25, 28, or 30%. That's a 50 to 100% increase in my tax table. And it's on all the growth and gains that have happened over that time frame. Now, if you can do the Roth, that's tremendous. But they tap out at how much you can put in a Roth. So how do wealthy people manage this tax issue? And how does the middle class lose out on the information? Well, what we've been doing is taking what wealthy people have been doing for 100 years and applying the same strategies to the average American. We just take a zero off the end so that it fits our budgets. So if you're interested in understanding how to legally, morally, and ethically reduce the amount of taxes that you pay, lifetime, let's have a conversation, because every dollar you get to keep adds to your lifestyle, adds to your legacy, and allows you to pay for something that maybe you wouldn't have been able to do. So I hope this is encouraging you to ask better questions, to seek better answers. More importantly, reach out. I'll meet with you. Someone on my team will meet with you, and we'll have a great conversation about what opportunities you have. I hope you have a great day. I hope this helps you. I hope this gives you hope, and I hope God blesses your journey.